Welcome, everybody, to today's session, the ITU Digital Transformation Dialogues. My name is Cristina Bueti, and I'm happy to be the master of ceremony. Before we begin, I would like to take a moment to discuss this session format. Today's session is part of a larger series by the ITU called the Digital Transformation Dialogues. In its new form, the Digital Transformation Dialogues will bring experts from a range of industries and specialties together for webinars, fireside chat, such as this one, and Ask the Expert sessions. Today's event will discuss the ways digital transformation has become a catalyst for profound changes within the banking industry, but we also have many other exciting upcoming events. Our ITU colleagues will provide a link in the chat for future sessions, and we encourage you to remain part of these conversations moving forward. Before I introduce our moderator and speaker, I would like to highlight a few logistical items. Firstly, all questions from the audience will be taken during the Q&A session after the fireside chat. If you have questions you'd like to submit, please do so by typing in the Q&A window, and the Q&A icon can be seen at the bottom of your screen. In addition to your question, please also indicate the city and country you are connected from. Finally, the fireside chat is being recorded, and the recording will be made available on the event website. Thank you very much for your time and attendance. I will now turn your attention to the Director of the Telecommunication Standardization Bureau, Mr. Seizo Onoe, who will be delivering today's opening remarks.
Hello everyone, and a very warm welcome to you all. Financial services have always been a networked industry, but we have entered a new frontier in recent years. Millions of people are gaining access to financial services for the very first time, with life-changing results. These services create the ability to save and make payments, and with tailored insurance products and loans, they boost small business and help people weather economic shocks. Fintech innovation is thriving. Big data analytics are helping us to identify customer needs and ensure that services are user-friendly. AI and data analytics are supporting better informed and faster decisions on creditworthiness, and we are now able to access the creditworthiness of people with little or no financial history, making use of data from mobile money transactions, airtime purchases, and social media. But for fintech to achieve its full potential, we need reliable connectivity and digital IDs. We need fair competition and interoperable payment systems. And we must also safeguard for financial systems and users of digital finance by addressing cybersecurity, data privacy, consumer protection, and digital and financial literacy. We are joined today by Amitabh Chaudhary, Managing Director or CEO of ASICS Bank, to share insight on how ASICS Bank is navigating new challenges and taking advantage of new opportunities. Mr. Chaudhary, thank you for joining us. We highly appreciate your support. At the UN Specialized Agency for Information and Communication Technologies, ITU has a key mandate to stimulate digital financial inclusion. Our technical standards provide for secure digital financial services with high service quality. And with our Security Lab for Digital Financial Services, we offer technical assistance to telecom and financial services regulators in emerging economics in applying standards and best practice for trusted digital finance. If you are interested in benefiting from this assistance, I will encourage you to reach out to us. Thank you.
Thank you so much, Director Onoe, for those insightful remarks. And now it is my pleasure to introduce also our moderator of today, Dr. Bilal Jamoussi, Deputy Director of the Telecommunication Standardization Bureau, to introduce today's topic and our distinguished speaker. Dr. Jamoussi, over to you.
Thank you very much, Christina, and good afternoon to Mr. Chaudhry and all colleagues joining us. It's my honor to moderate today's session. Today, we will be discussing how in this era of rapid technological advancements, banks are leveraging digital technologies to enhance efficiency, improve customer experience, and stay competitive in an ever-evolving landscape. We will explore how artificial intelligence and machine learning are transforming various aspects of banking, from customer service to fraud detection. To discuss these changes, we have our distinguished speaker, Mr. Chaudhry, the Managing Director and Chief Executive Officer of Axis Bank. Welcome. In a long and distinguished career, Mr. Aminat has not been afraid to take risks, challenge norms, and push the boundaries of conventional thinking across industries. Mr. Chaudhry currently runs Axis Bank, a financial conglomerate, together with a world-class leadership team and a clearly defined vision of being a bank that fulfills the aspiration of new, resurgent India through smart banking solutions. With that, let us start the discussion. Thank you for joining us. So I have a few questions for you, Mr. Chaudhry. The first one is how digital transformation reshaped the traditional banking landscape, and what are some of the key drivers behind this transformation?
So firstly, thank you so much for inviting me to this platform. Sincerely appreciate it. I thought since this was a topic on digital, I should not necessarily be wearing a suit. So please do apologize that I'm, just wearing a simple shirt. As you rightly pointed out in your opening remarks, digital has obviously fundamentally changed the banking sector in many ways. Firstly, digital has brought about a sea change in terms of the kind of customer experience you can provide. Gone are the days when it used to take, quite a few days to transfer money or open an account, or get a simple thing like just your address change. You had to come to the bank, you had to show a lot of documents, and only all that could be done in a kind of a physical environment. Now customers can do all this online, digitally, and instantly. Digital is now also the front and center when it comes to banking. For example, just to give you a sense for it, 90% of the transactions at Axis Bank are digital. Around 70% of our service requests are now addressed digitally. Also, depending on the product, up to 80 to 85% of our sales are happening digitally. And when I say digital, I'm not saying that digital is part of a journey. When I'm saying digital, I mean it is end-to-end digital with no physical intervention whatsoever. I think there are three reasons that make digital products better. One is digital enables obviously instant processing and straight-through processing. So for example, Indian government has built a full stack, what we call the digital stack. There are accounts on that. You have KYC on that. They've built a United Payment Interface where you can transfer money from phone to phone. You have digital KYC and so on and so forth. And as a result of this stack, the documents can be retrieved digitally. So this eliminates the need for customers to provide documents. It also enables instant processing, since this is digital data which goes directly into the systems, and it doesn't need the traditional maker and checker to input data. We have also created a stack in India where a customer can allow a bank or a financial institution to get data from all the other banks and financial institutions instantaneously based on a specific consent. So, just sitting from my chair, I can access or I can allow access to a financial institution to get all the data necessary for them to either underwrite me or get my documents, get a statement, or whatever that might be. Digital also enables operational cost reduction. So since most of the documents come directly from source, the need to check documents for fraud risk is also eliminated. And obviously, it enables product customization, because if it is offered directly to customers, it can be customized at an individual level. Different propositions and experiences can be created. So imagine a world where you can curate a product or a service to an individual, because the more you understand customer, the more data you can retrieve about the customer digitally. There is a world in the future where every customer can expect and should expect an offer and a service being done for them if I understand them very, very clearly. And I think that's what this whole digitization offers to the banking sector. And if people execute on it well, it can just change the way the world and the customers at large deal with financial institutions going forward in the future.
Thank you very much. And you hit on a very important point of the Aadhaar in India and how that's a big enabler for digital ID that not many other countries have, or at least in the developing countries, many aspire to have a unique digital ID that they can use to transact, and helps you as a bank to identify your customers in a much easier way. So yes, thank you for mentioning that. Now, in terms of financial inclusion, and you probably know in the ITU worked on financial inclusion for many, many years in the Financial Inclusion Global Initiative with the World Bank and the Gates Foundation. India hosted our Fiji Symposium, I think in 2019 or so. Certainly we wanted to hear from you, how can digital transformation in banking improve financial inclusion and access to banking services for underserved populations?
So I think India is a great example of what digitization and a digital stack can do. You mentioned the digital ID, which is called Aadhaar, and every individual in India has a unique Aadhaar number, which is where you can, using biometrics, actually establish that, yes, this is Amitabh Chaudhary and this is the Aadhaar number of Amitabh Chaudhary. On back of that, India launched a Prime Minister's scheme called Jan Dhan Yojana, and Aadhaar was the backbone of that particular scheme. Imagine opening, the number of accounts, for example, which have been opened under that scheme are 510 million accounts. And imagine if you were to open them physically. And the amount of balances which sit in these accounts today is close to 2 trillion rupees. So average balance is not very large. So these are very, very low balance accounts opened using Aadhaar as a KYC, which is biometric backed. Now, what this allows a lot of people who are at the margins of the society to firstly have a bank account for the first time. Secondly, it also allows the agencies, the government in this case, or any agency, to ensure that the money reaches directly into the account of the account holder. And it is established that this account belongs to that account holder. So there is no leakage in between. It goes directly to the customer concerned or the person concerned. And they can go, again, using their Aadhaar ID and using the hand and the thumbprint, can go and withdraw money from that account. Another thing which India has launched is United Payment Interface. And as I mentioned very briefly, that using a phone, just having a mobile phone and a phone number, you can transfer money to anyone having a bank account or a mobile phone or whatever that might be. Just to give you a sense for the size of transactions which are happening on that platform, in February 2024, there were 12 billion transactions worth 18 trillion rupees, which were done using the UPI platform. So it's another great example of how digital has helped improve ease of transactions across customer segments. UPI is now universally used by the richest people in the country to the poorest people in the country, because it is just so convenient. If you think about it, there are two issues that make widespread inclusion difficult. First, it is the operating cost of reaching out to and servicing the customers. And second, limited data available to underwrite the customers. Now, both these problems can be significantly solved through digital. Because you have transactional data of UPI, because you have data of, let's say, the Jan Dhan accounts, we are able to provide instant loans to any citizen of India using India Stack. We use Aadhaar to establish the identity of the individual. We use something called a video know your customer to onboard them. We use a concept which I mentioned earlier, account aggregator, where I can get data about the customer from any other institution to get access to the bank statements digitally. We have a concept of, let's call it e-payments. I don't want to confuse you with terminology, to set up repayments. We have a concept of e-sign, so you can execute documents digitally. So this process of all this India stack which has got created brings down the cost of acquisition also significantly. Moreover, the time to provide loans also comes down to almost near instant. Since we digitally have access to their bank statements and bureau records, information availability does improve dramatically, and that's why underwriting becomes so easy. Now there are new platforms which are emerging. One great example is the public tech platform for frictionless credit, which had been launched by our central bank's innovation hub. This platform intends to bring a large number of data sources onto one platform. So let me give you an example. Today, farmers can share their land record details fully digitally with banks like ours, and we can use this data to give them loans. This innovation lab has also worked with various state governments or the local governments to make this information available via API. So it is not only that it is available, but I can use an API stack to retrieve this information. We are also offering, what we call farmer credit cards. We are offering, very small enterprises loans, leveraging this platform. For example, we had launched this platform with the central bank as a pilot program for customers in a state of India. And we already signed up more than 100,000 customers under this platform. So financial inclusion, because of the digital stack and these payment platforms which don't cost anything, is making it possible for the first time in a very large scale. I mean, everyone does financial inclusion, but I think because of digitization and what has been done, the scalability has been incredible and very fast.
Really remarkable. I mean, the scale that you mentioned, billions of transactions, trillions of rupees. Certainly the technologies, the digital technologies you mentioned, and the India stack is fantastic, and it's proven to be scalable. I'm sure many countries, developing countries, would love to see how to reuse some of your technology. And I understand a lot of it is in open source, and perhaps India is willing to share this technology to allow other countries to go in that space and to accelerate this transformation. But in addition to the technology and the building blocks like India Stack, or in the ITU, we call it Gov Stack, that also interacts with India Stack, there is the question of the regulatory environment and the framework that would allow you as a bank to use mobile phones and digital financial services, and perhaps also allow operators to offer financial services. So the whole regulatory environment is one question, and related to it, of course, comes consumer protection and data privacy. So could you shed some light on these questions, please?
No, it's a very relevant question that on one side, while we're talking about the digital stack, how do we ensure that there are some guardrails around this? So Indian government regulators and public institutions have played, I think, a very key role in shaping the digital evolution of the country. I don't think if government would not have been involved, or regulator would not have been involved, it would have been possible to reach where we have reached, because if any individual or even group of banks would have created something like this, it would have been very difficult to rope in the other financial institutions to join the program. So India has taken the path of building digital infrastructure as public utility versus private enterprises. And we are different from most other countries in this respect. So for example, Aadhaar or UPI or e-sign or the hub I talked to you about are all public infrastructure. Second, all of it is for free. So it's not just public, but it's for free. So they're not created with any intent to make profits. Even entities such as account aggregators, where specific licenses have been given and which are in the private domain, are built in a way that the underlying rails are public infrastructure, which is shaped by the regulator. So the cost of even what is there in the private domain is also quite well controlled. India has also taken a very proactive and a big step forward with the Data Privacy Act. Right now, it has been passed by the Parliament of India. They're in the process of coming up with rules, and which should get, I think, announced post the Indian general elections happen. The law is as strict as what you have seen in Europe, and they've further amended some of the things which are applicable in Europe at this point in time. I think it will fundamentally change how data is viewed as an asset for customers' benefit versus any entity's ownership. So there are clearly defined rules in that act which will ensure that the customer has the right to decide who has the data, for how long they have the data. They have the right to nominate who gets the data. They have the right to erase the data. And they can decide which parts of the data they keep and erase. Further, regulators are also taking a proactive view by framing new regulations such as digital lending guidelines. So if you want to do digital lending, you have to follow certain guidelines, certain way the data is to be stored, certain way the data is used, certain way the charges and what services you're providing have to be clearly outlined and enshrined. So while people are growing their digital business very rapidly, it also ensures customer safety, privacy, and system integrity is in good shape. So I think the fact that the government and regulators are playing a very active role and they're ahead of the curve here a little bit, it will ensure that it's not only just about bringing the value of digital to the customers is being taken care of, but it is being done within a defined framework, which everyone is being pushed to fall in line with. Otherwise, they will be thrown out of that framework. As simple as that. And we are seeing action happening in India against some institutions which are not following that framework.
Fantastic. And we really look forward to interacting more. And I'm sure all of our members, as you know, India is hosting our World Telecommunication Standardization Assembly from 15 to 24 October in New Delhi this year, as well as the Global Standards Symposium on the 14th, which will be in parallel with the India Mobile Congress, IMC, India Mobile Congress. So we look forward to really getting more input from India, both on the technology side and on the regulatory side, to help many of the developing countries, members of the ITU, on this journey. So maybe looking to the future in terms of what are some of the emerging trends in digital banking, such as blockchain technology, and how they might impact the future of banking.
So there are quite a few trends which are emerging. Blockchain is obviously clearly one. We are past the hype cycle of cryptos now. So I think in the coming years, we will see some use cases of blockchain beyond cryptocurrencies come to the fore and function at scale. A lot of benefits in the financial services space, I believe, can be derived from a blockchain technology. Obviously, it represents a significant advantage in remittance, trade finance, and KYC process. Its secure and transparent nature allows faster cross-border transfers. Obviously, streamlines trade finance and enhances KYC efficiency. The problem, I believe, why blockchain is not really taken off is because ultimately, why would a group of institutions come together and start working with a group of institutions in some other country or even within the country, unless there is some kind of regulatory forbearance and regulatory sign off on using this technology, which is acceptable. So I think the regulators are watching this technology quite closely. All of us are trying various experiments. I think some trade finance transactions have been done in India, but not really taken off. A couple of banks in India are now trying to do a blockchain with video KYC, which I just mentioned, but they are in very, very early stages. Even decentralized finance, which is DeFi, leverages blockchain to offer decentralized financial services. So we are seeing early signs of blockchain, but I think the promise which people talked about a couple of years back still has to show up. Gen AI is the new buzzword. I always wonder who will make money on Gen AI. Is it the consultants and the people who are selling Gen AI, or institutions like us who will actually end up using it? But yes, I do believe financial services will be amongst the early and large adopters of Gen AI. There are very obvious benefits that can be derived through this, minimizing operational activities, providing better customer support, leveraging it for internal teams to become more effective with customers. And finally, hopefully, when the hallucination can be taken care of, finally as a tool to customers themselves in their financial journey. So we have, for example, in Axis, launched our first Gen AI platform for our employees, where they can ask any question on a product or a service or a process of that Gen AI platform and get the answer. We are getting about 85-90% accuracy. And the reason the accuracy is lesser than 98-99% is because we need to put more content on that platform. So it does not have the answers, so it's not able to give the right answers. We are also seeing voice-enabled banking gaining traction, offering convenience through voice commands, where, like, for example, assistants like we see that in Amazon Alexa or Google Assistant, I think can easily be translated for, banking services. We are also implementing various pilots around call centers where you can understand the tonality, where you can understand the customer, you can, on a live basis, provide the right answers. We are obviously trying some of these also for some of our, on the private banking side, are enabling some of our sales force and pitching the right product to the customer based on the conversation that is happening or the question that is being asked, etc., etc.
Great.
Third trend in my mind, quantum computing. Just one more, I'll add one more line. I know we're running out of time. Quantum computing will change the way the world will work, and it will have a number of implications in the cybersecurity, analytics, and core banking space. So that's another trend we should be watching out for.
Great. Thank you very much. I know you have to run. Do you have time for one final question?
Sure, sure.
How will the banking sector look like in 2040?
You know, there is a well-known saying that banking is essential, but banks are not. I would wager to say that banks will continue to exist and thrive for a long, long period of time. But I think the banks will look or have to look very different from what they do currently. If they don't change themselves dramatically, they will not survive. So my view is the banks of the future will be invisible. AI, digital will come together to deliver hassle-free services to customers. And that will be one big change. Bank of the future will be personalized for each individual. I had mentioned that earlier. Solutions and experiences will be customized. Banks of the future will be more secure. Bank branches will change dramatically, moving from service centers to customer relationship management centers. Banks of the future will be banks. I mean, keeping banking basics in mind, conservative outlook, risk management, customer centricity, compliance regulation, and so on and so forth. So a lot of it, something will be same, but a lot of it has to change for banks to survive.
Thank you very much, Mr. Chaudhry. I look forward to meeting you in New Delhi in October. Thank you for your insights today.
Thank you so much.
Thank you. Back to you, Christina.
Once again, thank you so much. It is really, I think that we had really great opportunity to hear this insightful conversation, and we definitely encourage you to join also our next event, which is a webinar on unleashing the power of digital water solution, exploring the flow of emerging technologies, that will take place on 22nd of March. So with that, I would like to thank you once again for your participation, contribution to the Fireside Chat. As you know, it will be recorded. Thank you so much. And I'm sorry that we hadn't the time to address the Q&A, but definitely we will see how we can respond to those questions and, and send the response to you. So thank you so much once again, and see you at the next opportunity. Thank you.